all right. Good morning, Lagos. Good morning, everyone, wherever it is you're listening to this program from, whether it's in your car, on your way to work, or your home. Listening, this is Follow the Money, brought to you by Nairametrics. My name is Ugodre, as usual, and that is not changing, of course. We do this every week, every Monday, 8 a.m. to 8:30 on this amazing channel. Of course, you can get any previous editions or any part of this show that you miss, or you just want to replay on any podcast platform that you like listening to, any podcast that you like, either Spotify, Apple Podcasts, or even on YouTube. You can get previous versions of this show, previous episodes of this show, I beg your pardon, on any of these platforms. Yep. So, bumper week. I hope you had a very great week. I always wish you guys profitable week. I hope your past week was profitable, and then I hope you had a great weekend. This weekend wasn't as bad as last, and in terms of forecasting. Of course, today going out looks like the queues are still there, but not as bad as it was last week Monday. So looks like the weekend may have been turned out real good. My weekend was good, so I'm starting off this week on a rather upbeat mode. Yes, so Follow the Money. It's now going to be done in partnership with, guess who? UBA. Yes, so UBA is going to be partnering with Nairametrics. So we're going to bring in this show. Every Monday now, we've got full support for this show. So that means you're going to be getting a lot more exciting content on this show, 8 to 8:30, now that we have partners. There's a whole lot of stuff we're going to bring in. At the end of the day, the mission of the show, the whole reason why we bring this show to you is to just help you improve how you invest, particularly in the capital market. That's what it is for. And then we hope that over the next few weeks and months and years to come, your investment prowess would have increased. We just want to make billionaires out of listening to this show. Me, myself, I'm not a billionaire, but anyway, you know how it is. All right, great. So happy to partner with UBA. So over the next few weeks, you're going to be seeing a lot more of how this partnership is going to take shape as we move on. Yes, so we go right into the show. Very busy week we had last week. So we've got a lot of stuff to discuss, but something on my mind this week that I want to just break down, because I've got a number of messages from some of you guys telling me, look, this public offer from banks, we don't know what to buy and whether to buy them. I've tried to address a lot of those questions in previous episodes of Follow the Money, but the one that really caught my attention was some people sending me, I think there was a video that kind of trended on X, formerly Twitter, where a certain pastor was talking about stocks that he bought in 2005 or 6, way back. You remember when they had that stock market bubble and then it crashed, and how he lost all his money? I think he bought one bank stock for maybe 50 naira and then it dropped to 2 naira. The entire story was all over, and it was pretty interesting. Over the weekend, we had Nairametrics, webinar as well, where we dealt with banking stocks. The webinars, buy, sell, or hold, bank recapitalization. You might want to check that out as well in case you missed that webinar. It's going to be on our YouTube channel later today, so you can catch it. We had amazing guest speakers on that webinar who really broke down some of these things. I know how we do things at Nairametrics, and our guest speakers weren't just people that were in capital markets. We had lawyers in there, we had accountants in there, we had capital market operators. So we had even from the NGX. So it was just an amazing webinar. So we also try to break that down. Nevertheless, I think it's important that I just address one other aspect of banking stocks. Are banking stocks expensive, or are they cheap now compared to maybe back then? Right? Because I think people don't really understand that a price of a stock doesn't necessarily mean that it is cheap or expensive. To determine whether a stock is cheap or expensive, there are certain metrics that we use, and they're actually quite simple. There's a very simple one, and I'm going to delve into that later today on the show, right? Later within the next few minutes, and I'm going to rank banking stocks from the most expensive to the cheapest. Okay, of course, that a stock is expensive doesn't mean it can be bought. We all know that expensive things also means that they've got value, right? If you buy an expensive wristwatch, doesn't mean that it's bad. Of course not. At the same vein, things that is a stock that is cheap doesn't also mean that you can't buy it. It probably is an opportunity because it might get expensive soon. So, gonna speak a bit into all that. But before we go into that, let's just go into the market report for the week. So the all-share index fell last week by 1.16%. The entire index is now 97,000 points. In case you're wondering what that means, at some point in the show, we hit over 100,000. So the higher we go in terms of the NGX all-share index in percentage points, then the better for the stock market. It means the stock market is making money or is expanding. And so we were at over 100,000 earlier part of the year, but now we're at 97,000. So it's kind of dipping as we go on. So fell to 95,973 because last week it did fall to 97,000. So it's 95,000 at the moment. Of course, we have indexes such as the NGX oil and gas index doing well at 3.5%. Insurance index just eked out a little bit of profit at 1.9%. The banking index also closed relatively flat, just 0.37%. But we did have dips in the industrial goods index, 4.94% dip. And the consumer index also fell as well. However, the NGX 30 also fell by 1.29%. The NGX 30 is essentially the bottom stocks on the Nigerian stock exchange for most stocks. Have high gainers. A lot of gainers in here. Among them is Owando. Owando closed again, 3.47%. That stock has been dead. RT Briscoe, of course, led the gainers. That stock gained 59% last week. So you can see that there's money being made in the stock market. So it's not like because when people just say, I lost money, I've lost. People are making money on a weekly basis in this market. Right, 59% in 1 week. Of course, Tantalizers also advanced by 54%. That one actually shocked me. I really need to look into it because Tantalizers haven't really been having a very good time. Remember, I talked about it a few weeks ago on the show when I talked about their results and the challenges that they're facing. But they gained 54%. So that, to me, remember what I said one time: when you see a stock gaining, it's either the results are good, which is highly unlikely, or maybe people already figured out what the next result will look like, or there is an acquisition going on behind the scenes that hasn't really come out yet. So people are already taking position. That is the more plausible reason here. But of course, I'm going to deep dive into this later this week. So you might want to look out for my money brief. I also do that every other day. Occasionally, you can check that on our YouTube channel as well, where I try to break down some things here. So, of course, Deep Capital also there. United Capital, one of my favorite stocks, gained 26% last week. This is a stock that keeps giving. Remember, they've done bonus shares, and this stock has been on a tear since then. So, despite doing bonus shares, this stock is still gaining 26%. And I didn't buy it. I actually thought of buying it last week. It was in my list 2 weeks ago, rather, because I was like, you know what, I just lost the bonus, so there's no point buying anymore. But it still gained 26% last week. And of course, you have Sovereign Trust in there. Transnational Corporation also gained 11%. Cornerstone gained 10% last week. And of course, rounding up the top 10 is SFS Real Estate and Skyway Aviation, gaining 10% each. So these are the top 10 gainers last week. And of course, on the loser table, we had Cotex that has been gaining pretty well for some weeks now, lost 37%. Dangote Cement been struggling to hold on to the high share price, dropped 10%, and that basically dragged down the NGX. So Dangote Cement alone makes up over 15% or so the market capitalization of the stock of the NGX, over 10%. And of course, on the gainers table as well, you have other mostly penny stocks, which really don't want to go into that much, but they all lost between 10% and 5%. Now we go into some of the announcements last week. All right, so top on the table is United Capitals. I talked about them just a few moments ago. Apart from the fact that these guys are giving us very solid returns, paying bonus issues and dividend this year alone, the first 6 months, they've had a remarkable 6 months by all standards. Like, you can't even compare. Very few stocks out there have given back to their shareholders the way this stock has. And then last week, they did announce something. They announced an official launch of a new subsidiary, making it I think this is now like the 7th or 8th subsidiary in their group. They've now launched a microfinance bank. So I'm saying to myself, where is this company going to? This an investment powerhouse on its own, now they're launching a microfinance bank as part of the group, United Capital Group. So I think I'm going to bring their CEO on the show one of these days. Come on, lay out the vision for where is this stock going to? I'm going to see the stock hit 15 naira per share very soon. I think we need to invite him on the show. Peter Ashade, I'm going to invite you on the show very soon so that you can come and tell our listeners what is going on with United Capital. You guys seem to be expanding at some light speed pace here. Interesting stuff. Came up with a microfinance bank, launched last week. I think the bank is somewhere in Lagos Island or so, and I also hear they have this beautiful app that they did also launch. So it'll be interesting to check what this means for the bottom line of that company. That's really what I'm interested in here. You can have as many microfinance banks as you wish, but what I'm interested in is what does that mean to the bottom line of that company? Is it going to add to their revenue? Is it going to add to their earnings per share? Because when their earnings per share increases, then it's all likelihood that the share price will keep increasing. Remember, I'm targeting $50 for the stock. Are we going to hit $50 this time next year for the stock? We'll wait and see. All right. So what else happened last week? MTN was also on my radar last week. So MTN, that's the group in South Africa, did also release their numbers. And of course, the Nigerian entity impacted negatively on the entire group performance. I mean, we all know what happened, and we've talked about MTN here before. But what caught my attention about MTN last week was the renegotiated tower lease agreement they have with IHS Tower. So in case you're wondering what the heck I'm talking about. So MTN, you all know, like most telcos, rely on towers, right? All the cell towers you see all around you is the reason why you're able to connect to their network, either to make phone calls or to be able to buy data or use data. And so the way telcos work is they don't necessarily own those towers. They used to own it before, but just doesn't make sense keeping those things on their balance sheet. So they sort of sold those towers and then leased it back from companies like IHS and I think ATC. Those are like the major tower companies in Nigeria. So they own towers all around the country, and some of them co-locate these towers. So a tower that they have can be used by MTN and maybe Airtel or Nine Mobile or any of the other telcos. Yeah. So, but those tower leases were typically done in US, in dollars. So they were paying dollars to the tower companies in exchange for leasing it. But there's a kind of mismatch because the likes of MTN and the telcos earn in Naira. We pay them in Naira whenever we use their service. And so it wasn't a problem when the exchange rate was pretty stable. But now that we are now in some kind of quasi floating exchange rate, that's a lot more risk for telcos. And we all know how much losses MTN took last year because of their dollar exposures. And a huge chunk of that dollar exposure is the tower leases. And so they did now, one of the strategies that they had in mind to sort of fix those loss issues was to renegotiate those tower leases. And so they have done that. So pretty remarkable. Within 6 months, they've wrapped that up. And what was interesting about the news is that it's going to save them 100 billion naira annually. That's just some incredible savings. Think about it. Just by renegotiating those tower leases, it's going to save MTN 100 billion naira annually. That's like how much some companies make in an entire year, some even in a decade. But that's what they're going to save every year by just renegotiating this tower. Why did you guys do that since, man? So that is solid for shareholders of MTN because that 100 billion naira is going to flow back to the company and they can use it either to, maybe invest or expand their business or maybe even, pay dividends to their company. Remember, MTN's balance sheet is pretty much impaired, and so that means they might not be able to pay dividend this year. But with this sort of money coming in, it just helps repair their dividend, and who knows, they might be able to pay. So solid stuff there, from MTN. Of course, Boa Foods was also in the news last week. It's also one of the stocks that I have in my portfolio. They said that they had signed a deal with a Turkish milling equipment manufacturer to build 4 new wheat milling factories with a capacity to mill up to 3,200 tons daily. That is solid news for shareholders of Boa Foods, because with more mills, then it means that they can expand their production and then they can increase their revenue and, most importantly, earnings per share. That's what I'm interested in. And so I love this news. Likely going to impact Boa Foods down the line. They've also been one of the better performers on the consumer goods index. So solid stuff from Boa Food. I like that news. So I'm going to be looking forward to this. And we all know that we consume wheat a lot in this country. So there's huge demand for wheat. And so the fact that they're expanding their capacity to 3,200 tons daily is solid stuff. For Boa Foods. So Boa's milling capacity at the end of the day will increase to 2.5 million metric tons per annum. Solid stuff here for Boa Foods. So Boa shareholders, I'm sure this would endear you guys. You guys would really love this. So it's good news. I'm not really sure how long it's going to take for them to build this, when it's going to be ready. We'll dig that up at some point and it will make it known to you guys. But that stock obviously on my radar for this reason. Next stock on my radar was Dar Communications. They were on the news last week and pretty interesting. I think there was a rumor that they sacked some of their pioneer board members, like some of their senior guys of way back. And so the company came out to clarify that, look, it wasn't like we fired these guys, we let them retire. Well, I mean, that's what they said. So, but the key guys here were Tony Akyutu. I'm sure you guys know him. Very popular name. He's been with Dar Communications for years. A veteran journalist. Very well respected guy. So he was also retired. I think he's been there for over 10 years as a director. So, I mean, it kind of makes sense that he gets retired. So he was retired. And of course, Oluwatosin Dokpesi also was retired. Dr. Oluwatosin Dokpesi was also retired. So that gist was kind of, I think someone a media company put it out there like they were fired, but the company's come out to clarify that they weren't fired, they were only just retired. Right, so new board of directors coming in there for Dar Communications. Also been struggling for a bit, so a lot of reorganization going on in that company. I do see this as one company to watch because they would be needing capital, and whenever they're needing capital, there's always an opportunity to invest in there because share prices will likely go up. So I want to pay attention to Dar Communications. And the next on my list was is Oando. So Oando has been in the news for all the good reasons. They also got a bit of negative vibe out there on social media, but I mean, more than anything else, they've been in the news for all the good reasons. And they closed their acquisition of a significant portion of the shares of Nigerian Ajib Oil Company. They paid the $783 million for the portion of that company. Solid news there, and that just took Owando's shares to the moon. He just went up and it's been great. This has been like Owando's best run in over a decade as far as I'm concerned as a company, and it's just been non-stop positive news for them. I'm sure these guys are pretty much happy. I'm sure most of their staff are going to be expecting solid bonuses by the end of this year. It's been just so good for them. All good news so far. I mean, we've got some negative news out there, but I mean, what can you do now? I mean, you can't fight everyone. But what was also interesting was that deal was funded by Afrexim Bank. What will Nigeria do without Afrexim Bank? Those guys just fund almost pretty much anything that is solid, but that's what we need in Africa, right? You need a bank that can always push private businesses forward, right? So Afrexim Bank also came out, not to be deterred. They came out and said, hey, wait a minute, this can't be all good news for Oando. We did put forward $650 million for this deal. So we backed Oando with $650 million lending facility, and that is how Oando was able to acquire this asset. So solid stuff. We're going to be looking out for it. The joint venture includes oil mining licenses as OML 60, 61, 62 and 63, which has produced 4.4 billion barrels of oil and 12 trillion cubic feet of natural gas to date. So it's a field, it's a producing field already, and with 1.2 billion barrels of oil and 10.7 trillion cubic feet of natural gas remaining. So solid business done for Oando there. So that is it for my news wrap. I'm going to take a short break, and when I come back, we're going to be looking at banking stocks. Cheap, expensive. Which ones should you be looking at? Be right back. All right, welcome back. This is Follow the Money, brought to you by Nairametrics and in partnership with UBA. In case you didn't know, UBA will now be partnering with Nairametrics to bring this show to you guys every Monday, 8 to 8:30. Of course, you can listen to any versions of the show on your podcast platform. This is essentially a financial literacy show. I mean, the whole idea here is just to break down stock market in a way that you never really, seen before. Just try to make things very easy. Just demystify that market, man. Stock market just shouldn't be for people that are just hide there. You've got to break it down, and that's what this show is about, and that's why I'm the one doing this show. All right, so as part of breaking down these things, let's just go into banking stocks, man. We've been talking about banking stocks for a while, and everybody's saying, there's so many public offers out there. Fidelity Bank just concluded its own. GTCO is out there. Access Bank also just concluded its own. Zenith is still out there. FCMB just recently launched its own. And there's just so many banking stocks. And everybody's saying, do I buy them? Do I not buy them? I bought them so many years ago. I bought that 15 naira. It's now 5 naira. All sorts of stories. Man, that was 10, 15 years ago. Come on, catch a break. We've all done businesses that, we did lose money. And does it mean you're not going to go back? You're not going to, does that mean that you're not going to do that business? You sort of you learn your lessons and then you move forward. That's how these things are done. You learn your lesson and then you move forward and make sure that you don't make that mistake again, because it's still a market that is highly regulated, much more regulated than it was several years ago. And people are still making money in there. And then now you have different guardrails. You have different people that are tracking everything that is happening, unlike before. I could remember several years ago, before we even started Nairametrics, you didn't have that much platforms out there that were monitoring, the stock market, that were giving you solid information, especially things that they probably didn't want you to know. But now there's a lot more information out there. You can check these things. We're now in an online world. And even if you're confused, you're not sure, you can go on social media, you can ask questions. So a lot more information out there. So you really shouldn't be turning your back against stock market. This is not 2005, 6, 7. Nope. Hell no. Not. We all need to pay attention, because look, the biggest wealth generator this world has ever seen has been the stock market. I know a lot of people think it's real estate, but it's been the stock market. Go check history. It's been the biggest wealth generator, and there's no reason why it shouldn't be like that in Nigeria. And so we'll go to banking stocks, and I now want to sell that shares to you. And I tell you to pay me 2 naira for that share. 2 naira for that share. So essentially, I'm telling you to pay me 2 times the earnings per share. Right? 2 naira price divided by 1 naira earnings per share. So I'm telling you to pay me twice the earnings, because I'm saying, look, this stock, pay me twice the earning, because I think the earnings per share can't remain stagnant. It will always grow. Because at the end of the day, if you're in business, you always want to grow your profit, right? So that the earnings per share is 1 naira per share today doesn't mean it won't be 2 naira per share tomorrow. And so the guy is telling you, come and pay me a multiple for that. So it's the same way if you do it, if you own a house today and you buy it maybe at 100 million, and tomorrow if you want to sell it to me, you're not going to sell it at 100 million. You're probably going to sell it at 120 million or at 130 million. And whoever is buying is also buying because he thinks that house will also be worth 200 million at some point in the future. So that's how these things are done. You sort of buy into the future, and the future value of something is the premium you're paying for it today. And so that's how shares work as well. So if you're buying, if I now tell you to pay twice, then it means you're paying twice the earnings per share. So 2 naira. Somebody else could also come and say, you know what, who also owns that company and also owns a share of that company, and says, you know what, I'm not selling mine at twice. I'm going to sell mine at 4 times. So that means he's going to sell at 4 naira per share. So remember, I'm selling mine at 2 naira per share. The other chap wants to sell to you at 4 naira per share. So 4 naira per share versus 2 naira per share. So he's selling at 4 times the earnings per share, because the earnings per share is still 1 naira, whereas I'm selling at 2 times. So what it then means is that my own share price, my own offer is cheaper than his own, because he's selling at 4 times more. I'm selling at 2 times more. So now imagine if we were 2 different companies, both have the same earnings per share of 1 naira. The other company is selling his own at 4 times, and this other company is selling his own at 2 times. Which one is cheaper? So the one that is selling at 2 times is obviously cheaper than the one is selling at 4 times his earnings. So how you know whether a share price is expensive is price to earnings ratio, which is a phenomenon I just explained now. Price to earnings ratio. So the closer the price to earnings ratio is to 1, the cheaper it is. Because if I was selling that stock at 1 naira, then I'm selling it at its current earnings per share. It's a giveaway. I basically tell you that just buy it at today's earnings, which means I didn't factor in the future earning of that company, like whether the company can even grow its earnings in future. So it's almost like I own a house, 100 million, I come and tell you to buy it at 100 million. Same value. So I haven't factored in any profit at all. And so that's why the closer it is to one, the cheaper that stock is. And there could be several reasons why it happens like that. And so the further away it is from one, the more expensive. We've seen stocks sell at price to earnings ratio of over 100, over 200. There's instances like that. And when stocks sell like that, they're usually called growth stocks. People think that they're just going to grow phenomenally. Their earnings per share will grow phenomenally. And so we're going into the banking stocks today that have, we're going to start from the ones that have the highest earnings per share to the ones that have the lowest earnings per share. We have just a few minutes left, so I'm going to quickly delve into that. Stanbic IBTC is the most expensive bank stock right now, for obvious reasons. It's been a solid bank, solid performer, doing pretty well, always growing profits, always paying dividend, have a solid parent company as well, Standard Bank Group of South Africa. And so no surprises, their price to earnings ratio is 4.7. So 4 times its earnings per share, making it the most expensive banking stock today. 4.7 times. The next is Sterling Bank. I don't really know why Sterling Bank is that expensive, but anyway, it's 4.29. That's Sterling Bank earnings per share. And then after Sterling Bank is Fidelity Bank. Fidelity Bank is trading at 2.9 per share. You see how cheap they are? 2.9 per share. To put it into context, 10 years ago or several years ago when we had that public offer, of 2005-06, bank stocks were trading at 30 times. You see the difference? 30 times. Now they're trading at 4, 5. So I've just told you the highest is 4.7 and that's Stanbic. Fidelity is at 2.9. Wema Bank is at 2. Zenith Bank, with all the immense profit that they keep giving and the dividend they keep paying, is at 1.37. So you're basically buying this bank stock for a steal. 1.37 times its earnings. So it's almost like if Zenith Bank is worth 1 trillion or 1 billion, you're buying that just slightly over $1 billion. That's a steal. Anybody who wants to buy Zenith Bank, if there's ever going to be an acquisition of Zenith Bank, is never going to pay this money. Nope. They're going to pay a whole lot more. But you're buying it on the exchange this cheap. After Zenith Bank is GTCO. GTCO is also, they sort of always interchange. Same thing, 1.37. Used to be like the most very expensive stock as well. But I guess because of the public offer, it's gone down a bit. And then you have FCMB Group at 1.26, even cheaper. And FCMB Group is currently doing their public offer. So you can imagine how cheap it is. 1.26. United Bank for Africa, UBA, our sponsor, is even cheaper at 1.12. Almost like 1. Like almost at par with its earnings per share. So that is a pretty damn cheap stock to own at the moment. They haven't launched their public offer yet. And the cheapest banking stock of all, which ironically is the largest bank in Nigeria by total assets, is Access Bank. Access Bank is trading at less than 1x. That's less than its earnings per share. So if you buy Access Bank shares, you're essentially like buying it at a cheap price, like cheaper than its value, cheaper than its earnings. That's just crazy. And so again, just to put you into context, banking stocks, like the most expensive banking stock today, is not trading at up to 5 times its earnings. And so you can't compare that to several years ago. So when people come out and say these things, what are you comparing? So the point here is that a bank stock is cheap doesn't mean you can't lose money. But I think the chances of losing money are a lot lower than if it was more expensive, because the margin of safety is higher when you're buying a stock pretty cheap. Warren Buffett says that all the time. And that's what you have to take account for. And so that's why it's pretty difficult to say most of the public offers out there, you can really buy any of them. They're actually quite cheap. What just matters is what you think about the bank and whether the bank has solid management, you really like the bank. You use some of these banks. What's their customer service like? This all matters. This is when you go into the banking hall, do you feel like you're proud, to have an account in this bank? These things all matter. And I think those are the differentiating factors. But for most of the bank stocks out there, they're pretty cheap. All right. I hope I've been able to break some of these things down. Of course, if you have any questions, you can add me on any social media platform. Just look for me at Ugodre on Twitter, on Instagram, wherever that you live. I'm not on TikTok, by the way, but I mean, you can find me on X, on Instagram, on LinkedIn as well. And just send me a question and I would respond. And that has been our show for today. Of course, we do this every Monday, 8 to 8:30 on Classic FM 97.3. This has been Follow the Money, brought to you by Nairametrics in partnership with UBA, proudly partnered. Until we do this again next week, do have a profitable week ahead.